Good morning. We are going to welcome Carmen here with Mitchell Wiggins, who is going to do the presentation for us on the new Virginia regulations on worker misclassifications. Carmen is a partner with Mitchell Wiggins and has specialized in closely held and family businesses. She is a regular speaker for the firm on topics including COVID relief programs and tax updates. Carmen was previously named a top 5 under 35 CPA by the Virginia Society of CPAs and a super CPA by Virginia Business Magazine. Welcome, Carmen. Thank you for being here with us.
Thank you. Thank you so much for having me. So I'm going to start out this morning just kind of going through a little agenda of what we're going to cover today. I'll go through an introduction of myself and the firm, and then we'll cover what are the classification laws, what do we look to as far as regulations and determining how we should classify an employee versus an independent contractor. How do you classify a worker? We'll go through a very detailed process about that. I'll provide some recommendations on how to document your decision that a worker is a contractor. And then at the very end, I'll talk a little bit about how Mitchell Wiggins can help you if you're struggling with some of these more compliance technical aspects. A couple of housekeeping items just before we get started. Please feel free to unmute and ask questions at any time. I'm happy to answer any questions that I can while we're on session today. Sometimes with this specific topic, things can be very nuanced, and I think you'll see that as we get into some of these considerations and classification. And so if you have any specific questions that you don't want to ask through the chat where everyone can see, or unmute and ask, I have put my contact information in the chat, and it will also be at the end of the presentation as well. But you're welcome to send me an email or give me a call, and I can try to assist you with walking through the process on how to classify a worker for employee versus independent contractor. After the presentation, we will be sharing a PDF copy of the slides with you all, so you will be able to have that to reference back. We do ask that you don't use this to go out and present yourself, that we retain the right that we prepared this material and it's for your use only. So thank you for that great introduction. I'm going to introduce you guys to Mitchell Wiggins a little bit because I don't know how many of you have interacted with our firm. So we are a full service CPA firm. We are headquartered in Richmond in the West End. Broad and Glenside is our main corporate office, but we have a satellite office in Petersburg, which is where I am talking to you from today. And we work with businesses from DC as far west as Stanton area down to the Valley, into Raleigh, North Carolina. For our office in Petersburg, we kind of dip into that North Carolina zone. And then as far east as down at the beach. So we have a pretty widespread Virginia footprint, much like your association. Our firm, one of our niche practices with Mitchell Wiggins, like myself, is working with family-owned and closely held businesses. Probably many of your businesses are, less than 5 owners, and maybe some of them are related, cousins, siblings, parental relationships. So we are uniquely qualified to help businesses like that because we have an in-house estate and trust department, and we also have an in-house business valuation department. And those two departments work really closely with our just general tax and financial statement auditing department to be able to provide solutions to generational transfers with businesses. So we work very, very closely in making sure that these family-owned businesses continue to be successful and also continue to provide wealth to those families. I'm really excited with our firm because we are working with some 3rd and 4th generation family members. And if you know anything about family businesses, it's extremely rare for it to make it to the 2nd generation, much less the 3rd and the 4th. And we like to think we had very, very minor role in that success. During the last 14 months, our firm has also really provided a lot of consulting services related to the COVID relief programs. Next week, I hope you all can join us because we are going to be talking about the PPP program. But we chatted this morning. I think we're going to throw in some more in-depth on the employee retention credit as well. So we've done a lot of consulting with our clients and non-clients about those two programs in the recent months. And so if you're interested at all in employee retention credit, it's a really great credit for retaining your employees during this period. It's very lucrative. It's between $5,000 and $7,000 per employee, depending on whether you're applying for 2020 or 2021. So very lucrative. We hope you can join us next week as well. A little bit more about me. I grew up in a family business. So my family owns a manufacturing business in Hopewell, Virginia. My husband runs it now. I understand those unique challenges that a small business has. It's almost like another member of your family and not just purely decision making. So that's really provided me the passion to want to help small businesses. And I feel like tax and tax compliance can be really overwhelming. And I had a specific situation that brought this topic to the forefront with one of my clients, and that's why I brought it up as a topic to discuss with you all today. And I'll get a little bit more into that as we dig into the topics. So I've been practicing CPA for 16 years. I have my undergraduate degree from Longwood University, and I'm currently in the process of getting my master's in taxation from Villanova. As you know, we talked about earlier, my practice does consist of mainly family-owned businesses. I work with a lot of contractors, retail businesses, and some manufacturers as well. So that's a little bit about me. Now we're going to dig into really the meat of our topic. So worker classification regulations. When you're starting to look at, is my worker an employee or an independent contractor, where do you start with that? Well, you start with the federal laws. So there's some in-depth federal guidelines related to whether a worker is an employee or an independent contractor. And this is important classification because depending on how you classify a worker, it will depend on how what taxes are owed and who owes those taxes. And so that's really the crux of if a taxing authority comes to you and says, hey, you didn't do this right, the penalty to you is going to be taxes that you were supposed to remit and did not, and then the penalties and interest related to that. So, you know, with an employee, employers are required to withhold, as outlined in these chapters of the Internal Revenue Code, which I know no one wants to read, you know, it'll put you to sleep in a heartbeat. But these are some of the taxes that when you have an employee that you are required to withhold from that employee or pay as an employer. So, and I'm sure many of you are familiar with this, federal income tax, then state income tax, which is governed by state law. You are required as an employer to pay both halves of the FICA tax. So that you have to withhold from the employee their portion, and then you have to pay your portion as the employer. So, you know, this creates a lot of compliance. You have to file your quarterly 941s. You have to file your annual 940, W-2s. All of that is a lot of compliance and a lot of paperwork. So there is this inherent pressure to relieve yourself of that compliance. And so what we run into is a lot of small businesses just saying, well, it's just easier to be a 1099. We're just going to make them a contractor because I don't want to have to deal with payroll and I don't want to have to deal with this. It's not an election. And if there's one thing you take away from this presentation today is that the definition of an employee versus an independent contractor is not a voluntary election that the two parties get to make. There are facts and circumstances that you have to consider. I wish it were that easy, but unfortunately there's laws that govern this, and it is not that simple. I had a situation working, not a client, but working with another entity, and they inadvertently got behind on their payroll taxes. They had one employee, And their response to me was, well, we don't have that problem anymore because we just made that person a contractor and give them a 1099 now instead of a W-2. And that's a huge red flag. And you know, you'll see today as we work through these 20 factors, I'll talk about in a minute, that you know, just because you make that election, the IRS has the authority to come in and say, no, that your classification was not correct, and we're going to go back and change and then impute the taxes on you that you should have paid. So, you know, no one wants to look at the Internal Revenue Code. It's very, very dry, very technical. So the IRS will come out with a little bit more plain English procedural guidelines. And in 1987, they came out with Revenue Ruling 87-41. This is commonly referred to as the 20-factor test. The 20-factor test is still widely used today, and we are going to go really dive into these 20 factors and get into the nitty-gritty of how you consider each one of them. I think it's a common misconception that you can check the box on one of the 20 and you're good. I'm an independent contractor. I checked this one item, I'm good. And that's not really the case. You can argue heavily on some maybe aren't as impactful, but it is important to look at all 20 and take the answers from all 20 and determine from that whole picture whether your worker is an independent contractor or an employee. So, like I said, that revenue ruling came out in 1987. Why are we talking about this today in 2021? Well, the reason that we are talking about this today is Virginia has new mandates for worker misclassification. And they are effective January 1st of 2021. Now, I did not write this in the presentation, but I am going to tell you that it has been communicated to me directly from the audit team who is with Virginia Department of Taxation that is auditing companies on this, that their interpretation of that effective date means that it is for payments made to workers January 1st, 2021 forward. So just because this regulation came into effect on January 1st of this year doesn't mean they're going to come out and they're going to audit you for something you paid to a worker in 2016. That's not the experience that I have had. I had unfortunately a client who was the lucky draw guinea pig to have one of the first audits under these. So what the director of the audit team has communicated to me is that they are really looking to implement these penalties that I'm going to talk about for worker payments January 1st, 2021 and forward. Now, if they come out and they audit you and you are the unlucky one that's selected for audit, they will still look at historical classification and they may impute some tax on you for incorrect classification, but they're not going to apply these penalties if it was for payments made prior to January 1st, 2021. So the good news is we can fix some things. You can take a hard look at your vendors right now and see if there may be some people that you need to maybe switch what their classification is. And we'll talk a little bit about a voluntary compliance program with the IRS that is an option to make some corrections there. So the really important thing with this new regulation in Virginia is the impact of the penalties. So failure to properly classify an employee individual as an employee. So if you have a worker and the state of Virginia determines that you have classified them as an independent contractor, you have sent them a 1099 and they should have been an employee, the fines are up to $1,000 per misclassified individual for your first offense. So if you've got 10 subcontractors that the state comes in and says they should have been employees, that could be a $10,000 fine. And that's substantial. If they come back again and they audit you again, it goes up to $2,500. If they audit you a third time, $5,000. And then at that point, you can be disbarred from contracting with the state. So if you are a contractor who does significant work with the state, I highly encourage you to take a hard look at your compliance with this, because that could be extremely detrimental to your business. And I thought this was also interesting too, and this is directly out of the code of Virginia. The third item here, and we've kind of highlighted it in red, that what I hear a lot of times is, oh, but we've got a contract, we're good. I have a written contract with them. They know they're an independent contractor. So if you require or request that an individual enter into an agreement that does not accurately reflect their relationship with you, they prohibit that. So they're basically putting in the law here that just having a contract doesn't satisfy the requirement. That doesn't get you off the hook for these penalties. So, I think this is really showing you what the state is looking for revenue here. So, if I look to why they did this, and my experience with the audit that we went through with one of my clients, they actually went through the entire independent contractor list and cross-referenced that to people who filed taxes in Virginia. And if you think about it, if my client had classified these individuals as employees, they would have had to been required to withhold state withholding and remit that to the state. So whether or not that person filed their taxes made no difference to the state of Virginia if they were employed, because they were being made whole and getting their tax revenue, regardless of that person paid their income taxes, filed their income taxes or not, because the taxes were being paid through their payroll withholding. When you have that independent contractor relationship, there is no state withholding. So if the individual does not file their taxes, the state is out those revenue dollars. So they have an incentive to want you to classify your workers as employees, so they are insured to get those revenue dollars. So that's what we saw. We saw the audit team going through the tax records and looking at some of the steps that we're going to talk about in a few minutes, but also looking to see if these workers filed their taxes. The client I had that was selected was a residential construction contractor. So they had many, many subcontractors. They had some individuals who provided false information. They had some individuals who, EINs got kicked back, tax ID numbers got kicked back. The contractor ended up being liable for those taxes to the state of Virginia because those individuals who provided false information and were not classified as employees and did not remit their taxes, the contractor, the business owner, was required to pay those taxes for that person who didn't file, that sub who didn't file their taxes in the state of Virginia. So, right or wrong, if you don't agree with this regulation, I really encourage you to reach out to your local representatives and let them know that if this is going to be impactful and a hindrance to your business, especially these level of penalties, laws can be changed, and you can always reach out to your local representative and tell them how impactful this may be for your business. So that is the structure under which we are required to operate. There's not a whole lot we can do about it right now when these regulations are what they are. So now we're going to talk about how to prevent having any of these penalties, and we're going to dive into the 20-factor test. So we're going to jump right into, is it a contractor or is it an employee? Is your worker an employee? So in those 20 factors in that revenue ruling that I referenced earlier, they break down the 20 factors into 3 main topic areas. And those are behavioral control, financial control, and a relationship test. And within each of those 3 areas, there are different considerations that a business needs to make in order to determine whether or not a worker is an independent contractor versus an employee. Some of these are going to be easier to document than others. Some of them are going to be very situational. The unfortunate thing is there are very few of them that are black and white. Yes, this is an employee. Yes, this is an independent contractor. What you really find is there's much more of a spectrum, and it's a lot of gray area. So I'm not going to say that you're going to walk away today and know exactly where everybody needs to be, because I think every business struggles with this. And so, the best we can do is document our decision-making process and have that available if you were to ever be questioned by any sort of regulating board. So under behavior control, a worker is an employee when the business has the right to direct the work that is performed. And this is extremely important. You do not have to exercise that right. You just have to have the right. So, I have a lot of people that say, well, I don't tell them what to do. Great, but could you? Could you? And this is probably a great example of a gray area there. Of course, you're going to be able to fire an independent contractor. I mean, anybody should have the right to do that, but really looking into the minutia of how they do their job. So under that kind of broad sentence there, the consideration you need to look at are the type of instructions that you're giving to your workers, the degree of instructions. How are you evaluating their work? What is that evaluation system? And how are they receiving their training? What is the detail of the training? With this program here is a great example. Do you have subcontractors sitting in the room with you, or do you have employees sitting in the room with you? So just as an example on that. I can get my navigation to work. So types of instruction given. And here's our laundry list here. Several of these topics we're going to dive, right into a laundry list of questions to ask ourselves. As the company, do you decide when and where to do the work? And now this one's really interesting to me in the world we're living in right now, because I can tell you all from our current experience as a professional service company who went completely remote and in March of 2020, I didn't know when or where my employees were doing the work. So I think that's a great example of, given these other factors that we'll go through, clearly the people who work for me are employees. But I don't, being remote, I don't know when or where they are completing their assignments. I've relinquished control over that because of COVID. They could probably be sitting in Tahiti doing it, and I wouldn't know a lot of difference about whether they were in the office next to me or not. What tools or equipment to use? Do you mandate, what, piece of equipment? Are they bringing their own backhoe onto the site, or are you providing something for them? Do they have control over who they hire and who they assist with the work? This is a really big one. These two were really impactful for this specific audit that I experienced with the state of Virginia. If the subcontractor had their own subs or had their own employees, no questions asked, they accepted it as an independent contractor. So that was a really, really impactful one for the Virginia Department of Taxation. Do you control where to purchase the supplies or where to purchase other services for that worker? Do you determine what work must be performed by specific individuals? And when I go through these questions, contractors have the hardest time, I think, answering some of these because, of course, if there's a specific skill set, you need to control who does what. But if you have the same people with the same skill sets, are you controlling which one does it, or is the worker controlling that? And then again, what sequence to follow when performing the work? I think that's in contracting that may be a little bit more difficult than some other situations, but these are very broad instructions that are meant to apply to all industries. And so you have to kind of apply what works for your industry and is more impactful for you. The degree of instructions given, and the IRS comes right out and says this varies among different jobs and different industries. Some industries you're going to have to give extremely detailed instructions, and in some industries you're going to be able to say, go dig that ditch from this point to that point. So lay a pipe here. So that it's going to vary depending on different industries. They acknowledge that right up front, but more instruction is more likely to be an employee. But no instruction, again, back to that gray area, there's a spectrum. No instruction does not automatically mean an independent contractor. An evaluation system. This one is hard to document if you don't have a formalized performance evaluation system. I would say if you do have performance evaluations and you're kind of giving them throughout the year, job evaluations, that's going to lean itself more towards an employee. But if the work is done and then you're paying someone for it at the very end and you don't really know how it got completed in the minutia of that, then that could indicate more of an independent contractor relationship. But again, and you're going to see this on a lot of these, the IRS maintains that either of these, either measuring specific details as the work is performed or measuring only the result, could still be considered an employee in certain circumstances. And I know I sound like a broken record saying that, but that again is just really why it's so important to look at all of these factors together, do the full determination when you're looking at these relationships. Training. So which is strong evidence that a worker is an employee? And I'd love to get some interaction if anybody wants to chat in an answer to this. So which one do you think is stronger evidence that a worker is an employee? Training a worker on how to do the job through periodic or ongoing training about procedures or methods, or a worker goes out and gains training using their own methods. Which of those to you sounds more like an employee? Anybody want to chime in?
I must say the first one.
Yeah. And I agree. And again, in different industries, that may be different, but when you are, doing regular training, then and they're required to attend, it may lend itself to be more of an employee. I will give you a good example of an exception to that, though. We work with a lot of companies that do subcontracting work for the large manufacturing facilities, chemical plants and Hopewell. And obviously, with an international chemical plant, there's a lot of safety issues to address there. Their subcontractors are required to complete periodic safety training that is provided by Honeywell. In order to be a subcontractor with them and to do work on site at their facilities, you are required to complete that safety training. That doesn't make these subcontractors an employee. So, again, that very, very situations where periodic ongoing training related to safety protocols, and they are clearly an independent contractor. So that's behavioral control. And in my opinion, behavioral control is the hardest to document. Other than maybe that person having the employees or workers that work under them, which I don't know how much you can really even document that. I don't know, you can't ask your contractors for their payroll records. I guess you can maybe witness that they have employees, they have a crew coming on with them. But in my opinion, behavioral control is one of the most difficult to document. And it may just be the fact that I'm a CPA, but I really like to focus on the financial control. To me, these are a little bit easier to document as a company making the decision as to whether or not this person is an independent contractor or an employee. So under financial control, we've got the following items from our list of 20. We've got significant investment, unreimbursed expenses. Do we have an opportunity for profit or loss? Are the workers' services available to the market? Are they available for other companies to engage with them, to contract with them? And what is the method of payment? And not talking about credit card or check, but how things are billed and how you kind of enter into that arrangement for payment. So significant investment, this is one that I think is very easy from a company standpoint to document if you are not providing the investment as far as tools and equipment, and the subs are bringing that in themselves. So if an independent contractor has invested significant sums in their business, then that is much more, an independent contractor is more likely to do that. An employee is less likely to have to provide their own, large piece of equipment. My employees don't have to purchase their own computer. We provide a computer for them. But the IRS states in occupations such as construction, workers spend thousands of dollars on the tools and equipment they use, and they are still considered employees. So that is directly in the guidance from the IRS. So they caveat that they like, hey guys, you've pushed this off onto the workers, but that doesn't make them independent contractors just because you've pushed a requirement for acquiring those tools onto them. But on the other side, they also state that just because a worker doesn't have a significant investment, oh, that's a great question, Lisa. We're going to talk about that in a minute. Lisa chatted in, how does the IRS say a person is not an employee when you hire someone from a company to work for a short period of time? That's a great question. We're going to cover that one in the next topic. Thank you. Some industries do not require large investments, and so you may have a situation where you don't have a large investment and you're still considered an independent contractor. Unreimbursed expenses. Does the worker have fixed costs that continue regardless of whether the work continues? And this is where business license, liability insurance, workers' comp insurance, all of those items come into play. Does this have what most people in the construction industry are, maybe don't have a physical office space if you're talking about small subs that you're really making this determination on. So they're unlikely to have a place of business that they're actually renting an office from. But that isn't that, rent would be a continuing expense that's unreimbursed. And then very related to that unreimbursed expense is a profit or loss opportunity. Could the work incur a loss? If that person doesn't, lay the brick correctly or dig the ditch correctly, are they responsible for losing the time and going back and fixing it? Or are they compensated an hourly rate where, you're going to incur the loss for that? Who has the profit or loss opportunity? You want to shift that profit or loss opportunity onto the worker if you want them to be an independent contractor. Services available, I will tell you in my specific experience recently, this was a really good one. The agent specifically asked for if they had any business cards for their independent contractors. So if you have someone that's questionable, maybe ask for their business card, stick it in your files, your vendor files. Does the worker advertise? The Virginia Department of Taxation agent searched for advertising, searched for them advertising. She said the phone book, but I really doubt, I don't know if the phone book even exists anymore. So I'm guessing she was like on yellowpages.com or something, searching for it. Does the worker maintain a visible place of business? Again, in construction, that's highly unlikely for really small subs. Is the worker available to perform work to others? This one was really, really big. If the Department of Taxation could see that this person was issued 1099s from multiple businesses, huge. I mean, that person is holding themselves available to provide those services to other businesses. And Lisa, that might kind of go into your question too. If you've only hired them for a short period of time, they're likely performing services for other people as well. Method of payment. Is the worker guaranteed a set amount over a period of time, a week, a month, or is it very job specific? If you complete this one job, you're going to get however much compensation for that. Is it, one of the examples that they give, and probably not as applicable to construction, but in manufacturing, a per piece. Are you paid per piece that you complete? So you control how fast you do it. If you do it more quickly, you make more profit. If you're very slow at it, you make less profit. Looking at that flat rate. And there is the caveat there that independent contractors are frequently, but not always, paid a flat fee. And I think, and Mitchell Wiggins, the CPA firm, is a great example. We are engaged with our clients sometimes in flat fee arrangements, but for example, our tax services they're not a flat fee, they're an hourly rate. So based on the people who work on the tax return and what their hourly billable rate is, that is how much is charged to our clients. And if we were, just an individual CPA in the marketplace, just because the client of that CPA was paid them based on an hourly rate as opposed to a flat fee for doing a tax return or financial statements or bookkeeping, that doesn't make them necessarily an employee of that firm. So again, another very situational aspect. So in my opinion, those are a little bit easier to document than the behavioral controls. Now we're going to jump into the last topic, which is the relationship test. And I think, Lisa, that's really going to answer specifically your question. So within the relationship test, that works to determine the relationship between a worker and a business, and looking at the 4 items listed here. So services provided as key activities, employee benefits, the permanency of the relationship, and Lisa, that's going to discuss your question there. And then they're going to look at written contracts. And I will tell you that, again, I mentioned it earlier, I have so many clients say, I'm good, I've got a contract with them, we're good. I literally had the Virginia Department of Taxation agent attempt to tell me that a contract was worthless. And I responded to her that I think pretty much every attorney in America would disagree with her. They are extremely useful, provide great information. But I think her point was, you need to go beyond the contract in your documentation. So the contract, rather than saying it's worthless, I'm going to say it's the starting point. It's the first piece of information you need, but you need to go beyond that and get some more documentation. And after we get through the 20 items, I'm going to go through some recommended documentation that I recommend all my clients have in their files. So services performed, this is a really important one, and this is extremely difficult for the construction industry, but it doesn't necessarily completely taint the person as an employee. So is the work performed a key aspect of the business? Is the company likely to hold the work of the worker out as their own? And so my example of that is, do you have a subcontractor that is, you're maybe a backhoe operator? He comes in, he brings his own backhoe, he does the work, you tell him it needs to be done by Friday. As long as it gets done by Friday, you don't, care when he does it. He can do it at midnight, he can do it, on Tuesday, Wednesday. But are you holding that out as your own work? And again, none of these are definitive in and of themselves. You look at the full relationship, but you would have to answer yes to that one. If that's part of your whole package that you're contracting with someone on, you would be holding that subcontractor's work out as your own, as a part of your whole package. On the flip side of that, if you maintain a corporate office and you have a landscaper that comes in and he mows your grass and he weed eats and he trims your crepe myrtles, you're not holding his work out as your own. Clearly, you're not hopefully you're not a landscaper. You may be a landscaper as well, but if you're not in the landscaping business, you're not holding that work out as your own. And so that just, pushes the needle more into the independent contractor. This is just a third party I'm contracting with to cut my grass. They do it when they want to, or they can do it on a set schedule, but having that, holding the work out as your own, just makes you have to look at the other considerations in a little bit more detail. Employee benefits, independent contractors typically do not receive vacation, sick leave, insurance, health insurance, dental insurance, access to pension plans. Lack of these does not mean that a worker is a contractor, though. If you don't offer vacation, sick leave, insurance, or pension plan, doesn't mean all your employees immediately turn to independent contractors. I've also heard of situations where short-term contractors are offered some of these benefits. So, again, a gray area. There is flexibility in providing these types of things, but typically, the majority of the time, you do not see an independent contractor having access to these types of benefits. And then Lisa, this is specifically related to yours. And this one to me is one that you can document so easily. Anywhere you can document one of these in your contract with your contractors, and you can check that box. If an IRS agent or Virginia Department of Taxation can work through these lists and check the box independent contractor, man, we want to do it, right? So does the contract with your contractor have a specific term? Because the relationship with an employee-employer is generally assumed to be indefinite. It's going to continue in continuity until either party decides to end it. And so having that short-term period is a really, really big one for pushing the needle to that independent contractor. And again, one that's really easy to document within your contract. And I know that's kind of a pain. Well, if I document an end time, then that means I have to, do another contract so many years later, months later. Yes, I understand it's a compliance issue and it's a pain, but if it saves you, $1,000 per worker on a penalty, maybe it's worth it getting on a rotation with those. And then finally, written contracts. I'm going to say it probably more than I say anything else today. Contracts just stating that the worker is an independent contractor will not trump other factors. It absolutely will not. If it walks like a duck and talks like a duck, it probably is a duck, and they're going to make the worker an employee, reclassifying that. But these written contracts, I think, are extremely valuable because they are going to outline that the worker is responsible for their self-employment tax and paying their own taxes. That's really important if you're hiring someone who maybe just isn't that educated in how the world works, and making sure they understand, because where we have seen some issues in the past is, someone getting a 1099 at the end of the year and saying, they're going to owe all those taxes on their tax return. They're responsible for them. And that person comes back and says, I thought I was an employee. I thought you were withholding these taxes. I didn't know. And if you don't have that in a written contract that they signed, then, that's going to put you at risk there. It also will list the worker insurance requirements. And I will say that the audit that we experienced, the contract with their subcontractors was 5 pages long, and it listed all of the insurance requirements. Wasn't good enough. They needed to have a copy of liability insurance on every single one of those workers. That really helped to have that additional documentation. Really helped to push them into that independent contractor. Again, speaks to that ongoing expenses that are happening whether or not that person is working for this company. These are also really great for that rate of compensation, for documenting the, how you're going to get paid, when you're going to get paid, all of those aspects. And then again, safety protocols, great to have those, great place to document those. I am not an attorney, and I try really hard not to practice law because I don't like it when attorneys give tax advice. So this is just my basic knowledge of contracts, and I recommend that you work with your legal counsel to get a contract that works for your business and will protect you on more than just independent contractor issues. So those are the three sections. So we've just gone through the 20 items there. Do we have any other, before I move on to this checklist of items, are there any other questions? I know that was a lot of information, can be really confusing. One way you feel like it's an independent contractor, the next question, oh, maybe they're an employee. Any other questions, please feel free to chat them in. I really appreciate that question, Lisa. So this is a worker checklist that you can just kind of run through, and this or that type of question that I think really helps you kind of determine, are they a contractor, are they an employee? So does the worker have regular work hours? Again, if they're part of a team constructing, doing things, maybe they need to have regular work hours, but do they have irregular work hours? Does the employer set their hours, or does the employee set their hours? If there's a salary, high indicator of an employee. And then the relationship factors. Does the worker perform similar projects for other companies? Does the worker only work for your company? Only working for your company, not necessarily going to make the person an employee. If they're a really great sub, they have their own crew, they're coming on site, they're assuming a risk of business, that they're highly concentrated and you're their only customer. So, there's ways to argue on either side of these. And I think that's why it's frustrating to have them as gray areas, but they can also be beneficial to you as a business owner, that there are so few black and white ones, and you can really argue for the direction you need to go. So I wanted to include that checklist in there just to kind of give a few, question and answer type things. It really helps to go through that process. So now I'm going to talk about how do we document our contractors. What should we have on file? And I'm going to caveat this screen here and tell you that some of these were from a list provided to us from the Virginia Department of Taxation audit team. I think a lot of your subs would laugh at you when they asked you to give them this. And some of this is just private business information that they're not going to provide. But I wanted to share it because it's what the Virginia Department of Taxation is sharing with the folks that are being audited. So Form W-4. I'm going to stop for a minute here and get on my 1099 W-4 soapbox. Oh, W-9. I'm sorry, that's a typo. I'll have to fix that in the final presentation. It's W-9, request for taxpayer ID. So we assist our clients with 1099 preparation every year, and you are required to send 1099s NEC. It's a new form. If you missed that this past year, it previously was 1099 miscellaneous in 2020 reporting that was due in 2021. The IRS came out with reinstituted a new form. It used to be a form, they did away with it and they brought it back. It's called 1099 NEC, non-employee compensation is what NEC stands for. We run into this every single year. Our clients call us, hey, I need some help preparing my 1099s this year. We start going through their vendor files. We start looking at their payments, where they paid their subs. And we say, okay, we need your tax ID numbers on this list of individuals. I don't have it. How do I get it from them now? The easiest way to ensure you get the information is to get it right at the beginning of the vendor relationship. And what I recommend is, and people don't like this, and I understand that, but you don't pay them until they give you a W-9. They don't get paid. Withholding payment is the easiest way to get a W-9. And, the penalties are significant with the IRS if you don't file 1099s. I think it's $100 per instance per day that you haven't filed it. So, you're taking that responsibility on if they are not sending you the information and you're not able to send the 1099 to the IRS. So what the IRS would tell you is the proper order of events is that you request a W-9. If they refuse to provide you a W-9, you are supposed to withhold federal income taxes from their payments and remit that with their 1099. So just as Virginia is coming through now and saying, we want our money withheld regardless of, whether this person files their return, technically that's what you're supposed to do for the federal government as well. So, get those W-9s, just getting on my soapbox for a minute. The quicker you get them on the front end, the easier it is on the back end. The W-9s, we recommend you keeping those in your vendor files, and have a folder for each vendor, or have an alphabetized notebook where everything's, in a sleeve for each vendor. Have that W-9 in there. Have your independent contractors contracts in there. Make sure they're signed and dated by all parties. Proof of workers' liability insurance. This one was really big. And I know these are a pain because they have to renew them every year. And yes, you should get them every year. I know it's a lot of catch up on those as well. Proof of unemployment insurance. That's payroll records. I think that's very invasive to ask a subcontractor, but again, it's on this list from the Virginia Department of Taxation. Proof of workers' comp insurance coverage. I think that's a little bit more reasonable to request. Articles of organization or articles of incorporation. That one, I don't really care for that one either. I think that's sort of private business information. What you could do is, if they are giving you a W-9 that has an LLC on it, you can go to the Virginia State Corporation Commission website and look up that entity and see if it actually is registered with the state of Virginia. There's a little page you can print out there that would help your case there. Business license was a really big one, asking for their copy of their business license. I think that would really help. And any other license and permits for their specific operating entities. And the information showing the worker's business address or forms of business advertising. So if you get those business cards, plop those in that file as well, so you have those. Not saying if you don't have one of these, they're going to say it's an employee, but the more information you have, the easier it is. I was very fortunate that the client that was chosen of mine for this audit, the office manager is amazing. She's incredibly organized and had a 3-ring binder, alphabetized, all the information in there. She was extremely diligent about getting signed contracts and having insurance. So she had liability insurance on pretty much every single person that subbed with them, except for a few. I wanted to provide a few links to some resources here. So you should be able to copy and paste these out of the final presentation and use them in your research if you're looking into classifying people. The IRS has some a lot of this information today came straight from the IRS guidance, most of the information today. So that first link is the link to the IRS guidance on that. The second link is the voluntary classification settlement program. I'm going to caveat, I have not had a client actually use this settlement program, but I wanted to make you aware that it's out there. So you can go and say, I misclassified these people and I'm going to try and make it right. And there is a prescribed way for doing that, where you pay certain taxes that you should have remitted related to those individuals. And it will sort of catch you up and get you clean for the future. Virginia Department of Taxation also has some worker misclassification guidelines. I think they published that in light of these new audits that are happening with this new guidance. A lot of that links to, again, the IRS 20 factors test. So it's going to link you to some of those IRS publications. And then I've got a link here to the SS8 that I'm actually going to go over in just a second. And then I've got a link here to the W-9 form, just if anybody needs a W-9 form. That's the request for taxpayer ID number. And real quickly, I just want to talk about the form SS8, determination of worker status. I don't know anyone that's actually ever used this in the process that it's meant to be used for, but you can do this. If you have a worker that you're just really not sure about and you want to be 100% sure that the IRS approves your classification for them, you can submit this form to the IRS and say, tell me if my classification is right. Again, I don't know anybody that's done that, But the form itself that you complete is very, very helpful in working through these questions. So it kind of talks you through some information at first if you were going to submit this, but it really works you through the factors test. So if you were trying to document something and you wanted a good place to start writing a memo or something, these are some great questions to put in there. But it goes through, like I said, all of the three main factors, behavioral controls. It goes through specific training. How does the worker receive assignments? Determine the methods by which the assignments are performed. What is the worker's daily routine, his schedules and hours? It goes through all of the items. It goes into the financial control and very specific questions related to financial control. Does the firm carry workers' compensation? Is there economic loss or financial risk? The relationship, what's available to the worker? Can the relationship be terminated by either party without incurring liability or penalty? Maybe that's something good to include in your contract there, if you don't have that already. What type of advertising, and all kinds of examples here. So I'm not recommending that you use this and let the IRS classify your workers for you. I'm just providing it as a tool so that you have another tool in your toolbox to help you in determining these classifications to avoid these penalties for the state of Virginia. So, oh my goodness, I didn't realize how close we were on time. How can Mitchell-Wiggins help? Like I said, we do provide audit representation for our clients. That's not normally a service we provide to non-clients, but when you are a client of our firm and you are selected for audit, we provide all of the representation. So in my client's example, the auditor never stepped a single foot on their property. The auditor came here. They sat in our conference room for 2 days, and we provided all of the answers. I was the kind of liaison go-between, so we were able to keep the auditor off premises for them, which we felt like was important. Tax consultation, we can provide general tax consultations, employee versus contractor, maybe we can provide some guidance working through that. And then Form 1099 preparation assistance. Not something we do as just a one-off engagement, but it is something that we do provide for our clients, and we are doing their full tax work for. So that's something that we assist our clients with as well. How to reach me specifically, you can reach me at really my email is probably best because I am working out of the office quite a bit, and that is my office phone number there. Our website is listed there as well, and we have a lot of really great resources. We try to record most of our webinars that we put on, so if you guys are interested in a little preview of PPP or employee retention credit, those are available to view on our website on our COVID resources page. So I think I am just about out of time, maybe time for one question if anyone has one. No. I want to go back again. I'm just going to reiterate, this was the reason that we were here today. These misclassification penalties are significant. And if you are unhappy with them, please reach out to your local representatives. Let them know that it's hard doing business in a state with so many significant penalties for errors.
Thank you, Carmen. Appreciate it. I'm gonna go ahead and stop the recording now.